Taking a look at the CNBC TV show.
And they list 5 reasons why the bottom is not in for SaaS. And among the major reasons that struck a chord with me as a business owner and somebody that sits with a chief technology officer and talks about our budget, we have, 80 different software vendors. They said on half of those calls, they heard this term, containment. Containment is not going to, cost containment. This is not going to be positive if we start to hear SaaS contracts that were supposed to be rolled, and we start to hear on these conference calls for ServiceNow, for Workday, et cetera, Salesforce, that the rolls are taking longer. And it's not just an automatic price increase this year like it has been every other year. And I think that's why it's tough to say it's the bottom for those names. Well, how do you react to that? I see you finger up.
So great points. Let's take a look at another sector that's a partner in crime here, which is the asset managers. I mean, take a look at the pretty strong rally in Apollo. I don't really want to bring Blue Owl into the
Apollo had a strong rally. That's good.
Maybe we've just gotten way too negative in software. And again, I go back to my comment from Monday or Friday that the market has just said enough is enough. Sure, there may be another jag down, but I don't think you're going to retest those lows in the software stocks or in Apollo. It just got to be ridiculous is what I'm saying. Are the threats that you're talking about real? Yes, of course they are. But the market overreacted, in my opinion. And I know the market overreacts often.
I mean, if you look at, so it's not just Oracle that's almost 50% still off of its high. Salesforce, still 39% off of its high. Snowflake, 47% off of its high. ServiceNow is 54% off of its high. It's why the point that Josh made is relevant and super important.
Talking about Snowflake Inc.
That these stocks still have to go. And you use the term sugar high to describe, well, maybe Oracle was a bit of a sugar high. No, all of these stocks investors have judged were all on sugar highs. And now they're coming home. They had come home to roost.
Talking about stocks on sugar highs. It's kind of a interesting comparison. And he said sugar high again.
Listen, yes. And, I've questioned the valuation of many of these companies, Snowflake being at the top of the list. Not that it's a bad company, but I've just...
Oh, he's questioning the valuation of Snowflake.
Was there a reckoning here over the last 9 months or so? You bet. But I do think the reckoning went too far. And look, especially with those numbers of the declines that you've talked about, I think the bottom is in. Now, also bear in mind, Scott,
the bottom is in for the market.
I'm talking about are ones where the valuation, we're not talking nosebleed Snowflake valuations. We're talking about Microsoft, roughly 21, 22 times forward earnings. Oracle, around 20, 18 times earnings. Adobe, I don't even want to talk about it, but,
He doesn't want to talk about Adobe.
Adobe's cheaper than Delta, frankly. I mean, that's telling.
He must not really be into graphic design or anything.
Price speaks. Was Adobe's guidance going to be as bullish as Delta's was in your wildest dreams?
Well, so here is my point. I think the market's getting it wrong. The last earnings report from Adobe, they had 10% top line growth projected for the rest of the year. That's not terrible. That's not like sell this stock.
Adobe has 10% top line growth projected.
They're not.
But they might be less than expected even here. And that's the problem with some of the names like Adobe, Salesforce, and Autodesk, where they are actually seeing competition that is generated from AI.
It's budgets.
Adobe and Autodesk are seeing competition from AI. That's interesting.
You talk about the customers of these companies. That's all that matters. What are the customers saying and doing? It's not that they're ripping Adobe out. It's that there's a compete for increased spend. And a lot of the earnings growth in the software space have come from these kind of automatic re-enrollments at higher rates every year. And all I'm suggesting, you're not going to get the benefit of that going forward that you've had for 15 years. If a company went to UPS or JP Morgan and said, hey, it's December, you got to talk about your next 3-year contract. And by the way, it's 67% increase. These SaaS companies were serving as the system of record. They were so critical to everything that they were able to just say, we're upcharging you and you're paying because what are your alternatives? And now for the first time, there might be alternatives being developed by companies like Anthropic, and it changes I think it changes.
So Anthropic is hurting Adobe and Autodesk.
I agree on the premise. I'm not disagreeing with anything you just said. I'm
Disagreeing on the price. I mean, the market.
Yeah.
I feel like the market's a lot smarter than you want to give it credit for on the names that you believe are upwardly punished. At some point, maybe the market is actually correct. You can't just say, well, in this name, well, the market's wrong.
Adobe's at 248.
That name in this space, the market's wrong. At some point, the market votes and the market's right.
You know what? I can't argue with that. I mean, and I don't want to fall back on, hey, it's in a portfolio. I'm not crying over this. I've got so much else that is working. And again, if I look at Oracle up 20%, or if I look at Microsoft now rallying,
So this is Jim Leventhal from Cerity Partners. He's a chief markets strategist.
flyers on this. And I am going to stick with this flyer on Adobe.
Okay, I mean, you made that point, and whatever. I don't know what to tell you on that one. Semi, I want to talk semis, with you.
Wow.
Because that's where
Big disagreement over Adobe. A couple of these guys don't like it.
today, but you've also had some not so great one. Applied Materials is down 2.75%. There's a lot of talk lately about memory chips, for example. BTIG's done a big increase with downside risk there. We continue to think memory group is one of the most vulnerable areas of the market for downside reversion. So Micron went down a lot, and it went back up a lot, and now he says maybe that's at risk. I mentioned AMAT because
Yes.
you
Turned it. Yeah. Well, because it's been an incredible.
Airbnb is at 138.
Owned it slightly more than a year. It's been awesome. We took a little bit off the table because it has become a very large position in the portfolio. We don't own that many names, but when a name gets over 5%, then we start to think about, is this a point that we might trim some? And we made that decision in two paces.
Okay. And lastly, before we take a break, there's a big earnings report in overtime tonight, and it is Netflix, which was up a lot, then down a lot. When the
Talk about Netflix. It's at 108.
that ended, the stock's had a nice rebound, guys. Let's have a look at that over. Well, let's go 3 months, if you would.
Okay.
Please. Well, there's a year, but that shows it. Let's show me 3 months because the stock had a great run, and then it, obviously when the bidding.
I guess Netflix had a stock had a great run.
In 3 months. You own the name, it's up 13% in 1 month and 4.5% week to date. I feel like, yeah, they raised prices.
It's up 13% in a month. Oh, I guess there's streaming wars. We got a war in Iran and a streaming war.
The stock was 70. They lost the deal. It's $100 billion in debt. Oh well, somebody else has to do that. So I do think they look like they won the streaming war, which is more important. It's basically
So Netflix won the streaming war. So
So tell me on a net basis why they continue to add subs year over year, almost regardless of economic conditions, and not just in the United States, all over the world. It's extremely sticky, and Wall Street likes that, especially when things get as volatile as they are. They're not under threat from AI, at least not at the moment. If anything, they use AI to their advantage to make the app even more.
So Adobe and Autodesk are being threatened by companies like Anthropic, but Netflix is not. I don't know if eventually that will change.
They announced their bid for Warner Brothers. And I could like imagine it'll get sucked right back up to 120. If it
Because Netflix made a bid for Warner Brothers.
I have some news out of Washington. Emily Wilson.
I mean, I could see that Netflix is kind of more in Hollywood. Warner Brothers is in Burbank. It'd be nice to have kind of studio space on both sides of the mountain. Senator Warren says Fed Chair nominee Warsh has not disclosed more than $100 million in assets. So that's a really big story.
potential conflict of interest. And in addition, the Office of Government Ethics, the one who processes these forms, actually did flag on the report saying that Warsh would need to divest in certain funds to be in compliance with ethics. Here's more on what Senator Warren told us just a few minutes ago.
There's more than $100 million in assets to people or entities or outfits that are completely undisclosed and will remain undisclosed. That's not just a red flag. That's a red flag surrounded by fireworks and
Uh-oh. But the Fed nominee Warsh has a red flag.
without disclosing fully their financial holdings.
Warren and every Senate Democrat who sits on that panel put out a brand new letter today asking Chairman Scott to continue to delay Warsh's nomination hearing until they get more answers on that, and of course, until the investigations into Jay Powell, Lisa Cook have been wrapped up. And of course, that is the reason why Warsh's nomination could be delayed for quite some time because, again, Senator Tom Tillis just spoke to the other
So Warsh's nomination could be delayed.
block that nomination, not because of Warsh, but because he wants this investigation into Powell wrapped up. Warren also did quickly address Secretary Scott Bessent's comments yesterday that she was to blame for the private credit market, given that she wants to regulate banks. She pushed back against that, saying that both banks and private credit do need to have a regulator that's looking at them and flagging any bad actors. Scott?
I mean, he already obviously revealed this week that Emily's worth more than $100 million as it is. So this is now, Senator Warren is essentially saying, well, he already said he's super rich, but he's even richer than super rich. So we need more information on his richness. This is rich, by the way.
And some details on the richness. That's just what she's trying to say, is that they need more details on exactly where he is invested, and that if he is going to divest, that they need some proof of him actually doing that.
All right. Emily, thanks. Emily Wilkins down the cover. As we said, coming up, more committee moves. Terry is ready with yet another trade. We'll tell you what it is. Plus, Josh Brown, as his best stocks in the market, he is seeing a breakout in one big industrial player. Tell you what it is. We come back.
Oh, breakdown in one big industrial player. I thought that was interesting. Technology stocks don't use very much oil, so they're not affected by the spike in oil prices. And then Adobe and Autodesk are being threatened by AI, but Netflix isn't. And then also Netflix apparently won the streaming war. So it's kind of nice to know that at least one of the wars is being won by someone. Take a look at HBO real quick. Oh, it's Bill Maher.
Prevented type 2 diabetes the most. Ice cream. It makes you happy.
Talking about ice cream and diabetes. I was just talking about diabetes last night.